Hi, everybody. This is Kari Davis with Kari Sells the City. And today I am talking with my preferred lender, Keelan Harvey with Highlands Residential. Thank you, Keelan, for joining me today.
Thank you for having me. I'm so excited to be here. And after all these years we worked together, can't wait to educate some people about what's happening.
Well, and I figured now is a really good time to have another check-in with you. It's been a while since we've done this because I know that things have changed a lot for the mortgage industry, and I would like to make sure that everybody knows what's happening with rates and whatnot. So when it's time to buy a home, they are ready and armed with as much information as possible.
I love it. Yeah, right now is definitely a good time. A lot of things happening, so I'm excited for this.
Oh, good. Okay, so just to get started, what do you think is going to be happening with rates here in the near future?
Well, I think it's going to be the same thing that's happened through history every single time. A lot of people, you get scared because of the media and we're talking about all this doom and gloom, but the reality is there's nothing new and history repeats itself. So the reality is we've had the same cycle over and over again. And the kind of the talk of the town right now is inflation. And a lot of people, including not you, Kari, because you're fantastic, but some agents, when the Fed increased the Fed fund rate, mortgage rates are going to go up, but that's not true. Mortgage rates track with inflation, which is the talk of the town right now. So, and
Right.
the reason they track with inflation is because mortgages are like they're bonds basically, so they have a fixed return. So if my money is going to be worth less in the future, then the only way to offset that is to increase the interest rate, right? So, the history of mortgages all the way back to like Volcker back in the 70s is inflation goes up, mortgage rates follow, and then the Fed increased the Fed's fund rate to curb inflation, to stop inflation, to cool things down, and then inflation goes down and mortgage rates go down. So I think surely that's going to be exactly what's going to happen here. We've already seen the CPI or the consumer price index, mortgage rates should follow and go down as well.
Okay, so that leads into my next question because I heard so much on the news last week about, there's this big report coming out May 10th. And so I'd love for you to expand on that a little bit and tell everybody what happened.
Yeah, I have a smile on my face because I'm super bummed about it. I've been talking about May 10th for like 6 months, and why we are so excited is because the consumer price index tracks inflation. So, of course, we look at that very closely when we're trying to track mortgage rates. And May 10th was a big day because the CPI report was going to come out and it was going to replace April last year. So,
Okay.
the May 10th report came out was for this April, which would replace April of 2022 because it's a rolling 12-month average, and April of 2022 was a very high number as far as inflation. So when it gets replaced by a lower number, we should have seen bonds react very nicely. We should have seen mortgage rates drop significantly. It was going to be kind of the biggest factor that we've had in a long time, and unfortunately, it didn't quite work out that way. Unfortunately, so we kind of got our parade rained on a little bit, but I don't think it's the end of the world. Because what happened was the Bureau of Labor and Statistics on that Friday, they actually took a high number. They changed the report for 2022, which is crazy town. They actually reduced that April number. And
Okay.
so we still got the low number we wanted in this May, except it just replaced a lower number. So it didn't do as much damage as we wanted until mortgage rates.
Okay.
So that was the unfortunate piece. And but it did respond okay, just not as much as we wanted. But on the bright note, they didn't change for May and June. They kept them the same. So it's not that we're not going to have a party. It's just our party was moved a month, and
It's delayed a little bit.
it's delayed a little bit. So,
Yeah.
we want everything now like yesterday. And especially all of us in the industry, because, it's been a crazy year. So this is going to be kind of kicking off to a new chapter. And unfortunately, that's not the case. But don't be scared, everybody. It's all good. We're at the end of this. We're going to see mortgage rates come down. And they also, the BLS increased the 2022 numbers. So that means we'll see those at the end of 2023. So not only are the next 2 months going to be good, but as we get into the end of the year, they're replacing even higher numbers, which means it's going to have a bigger impact on mortgage rates. So where they did us a disservice in April, it's going to do us a benefit at the end of the year. Rates are going to go down.
Okay, well, that's great news. I'm sure a lot of people are going to be happy to hear that. I know it makes me happy to hear that. Um,
Yes.
So with rates being, they've been higher than they've been, in the last, 6 months than they've been for historically, right? It's just, it's
Yeah.
changed a little bit in our market.
Yeah.
I want to know, out of the buyers that you've been working with, how many of your buyers are actually able to obtain a seller credit for a rate buy down right now? Are you still seeing that in any of your transactions?
No, unfortunately, that's kind of a thing of the past. We encourage people when rates were at the highest, you could get all kinds of seller credits and you could do the buy down programs, which was fantastic.
Right.
That
I mean, I took
retailers,
advantage of it for sure.
heck, heck yeah. I mean, it was a great idea, to be able to take advantage of that because, when the purchase price is permanent, you can always refinance. So that alleviated some stuff. But we saw them like big credits go to smaller credits to no credits. And in fact, right now there's 3.5 offers per listing. So we're back, not quite in the world we were in a few years ago, but it's definitely shifting.
Right. Well, I know a recent listing that I had, we definitely had multiple offers come in and my sellers got more than they expected. So I feel that on my end as well, that it's not what it was, that even with interest rates being high, the market is heating back up again. So
It is. Yeah, I saw even with a little uptick in rates, I saw more people come through for a pre-approval than I did for months. So there's a
okay.
huge demand that's just kind of sitting on the fence waiting for these rates to go down.
People are waiting in the wings, right?
Yep.
Which is good
Yep.
if you're a seller for sure. So,
Yeah, for sure.
um, in terms of mortgage rates for a buyer, with it be them still being a little bit higher than what we're normally used to, why would you foresee being now a good time to buy rather than waiting if you're looking at getting into a house?
Well, same reason when interest rates went a little bit low and then all of a sudden everybody comes out of the woodworks. I think as rates go down, there's a lot of people waiting. We have a huge supply and demand issue right now. There's 14 million households and a little under is 980,000 homes on the market right now. So,
And
I
is that
mean,
nationally correct?
nationally, yeah,
Okay,
correct.
okay.
So I mean that's a lot of people with a small number. So I think, as more people get after, I think we are going to find ourselves in that position we were in before, where even more offers, right? And this low inventory, which means the homes are going to appreciate. So long story short, I mean, if you can afford to get into a home now, one thing's 100% certain that you will pay less now than you will pay in the future. And like I said, this term is so overused in our business, but marry the price, date the rate.
Right.
So once you pay for that home, that is what it is. You can always refinance, and we know rates are going to go down. So whatever you do right now, I consider it more of an acquisition loan because you're going to refinance. So it's going to be a temporary loan, and I think it's a fantastic time to buy. Also, there's a lot of people with equity in homes right now, so it's not all doom and gloom on the inventory side. I heard a statistic of 58% of equity, Black Knight, 185,000 average equity in a home. So there's people sitting on a lot of money. So when rates get low enough, they're going to want to take that money and step up to a new home, which I think will relieve some inventory. But I would suggest the sooner you could buy, the better, because you'll end up paying less for sure. And you pay less and then refinance at the lower rate. You got the best of all worlds, right off to the sunset, and call it a day.
Well, and that leads to my next question. So if you are a buyer that bought during, a higher interest rate and you do plan to refinance, like so many of us do, what are some of the other options? I mean, you kind of touched on that just now, but what are some of the options for refinancing? So what can somebody look forward to here, in the next year or so when they refinance?
Well, there's a couple of camps. I would say, and not surprised, but kind of surprised. There's people refinancing right now, even with higher rates.
Really?
And the
Okay.
reason being is because during COVID, they gave away the stimulus. There's 3 stimulus, which was fantastic. And you can see those spikes if you look on savings. But actually, savings is very low. It's gone below pre-COVID levels, and credit card debt's very high. So, it might seem crazy if you have a low 3% interest rate right now to refinance to, mid or high 6% interest rate. But if you're saving 1,000, I heard of a story, somebody saving 3,000 a month.
Hmm.
And just to get rid of all that debt, $3,000 a month is a ton of money. And if you throw that back at a mortgage, you could pay your mortgage off in like 12 years, right? So,
Right.
and then that's called a cash out refinance,
Okay.
which basically there's worse rate for a cash out refinance than a rate in term. So it sets you up when rates do go down to have the best rate possible. So that's one piece of it. And I say the other side of it is if you did buy a home in the last couple of years, we're really just riding that train to the bottom. I mean, we know it's going to go lower. We just don't know how soon and by how much. But there's a lot of Fannie Mae even says, 5%. I've heard 4%. So really, we just got to pay close attention, and I'm paying close attention with my customers, and
Right.
and just seeing when the right time is for them and to capture the lowest rate we can.
So another question, this is just, breeding conversation for us.
Sure.
As a buyer that bought during a high time with your interest rate, when would it be good for you to go ahead and refinance? Like, what triggers are you looking for? Or as a mortgage broker, when you've got clients knowing that they're in a higher interest rate, what triggers are you looking for to help, educate them on when a good time to refinance would be?
Well, I would love to say everyone in our business doesn't do funny math, but there's some funny math out there. So you want to be careful because it costs money to refinance. I mean, it's a
Okay.
huge chunk of change. So when you bought a house, all that money you paid was most of that's to third parties. So really what I like to do with customers is how much are we going to save? And you divide that by the cost, and that should give you a break even point. So it's a bit of a gamble too, because we don't know when the bottom is. So once you get to a certain point where it's making sense for you, I would guess, as my grandpa would say, a bird in hand is better than two in the bush. So, capture the best rate you can. And, we're going to get close. We're going to get to the bottom. We just don't know how low it's going to go. So if it makes fiduciary sense for you and your family to have that lower rate, by all means, but I'd suggest you want to refinance as little as possible because it does cost a pretty good chunk of change.
Okay, good to know. Is there anything else you want to tell us about what's happening in the mortgage world right now?
Well, if you made it this far, for everybody, congrats. I'm very happy that you did, because it's been tough, it's been tough for everybody, but I think we're to the end of it. So, everybody, positivity, keep your heads up. I mean, I think it's a great time to buy. I think there's a lot of opportunity. I think we're going to have the housing market is very strong. It's been, homes have kept value or appreciated every time through a recession besides '08. But the housing market caused that recession, which is very different. And there was 4 million houses with 4 million inventory and 3 million people looking at them. So, when you want to sell a house, you couldn't then. Now it's 14 million and 1 million homes so it's the exact opposite. So,
Right.
I mean, the reality is, your 3.5 offers, we're not going to see a 2008 mortgage meltdown. All that doom and gloom is malarkey. The reality is housing's strong, and we're going to have a great couple of years.
Yeah, I agree. I think especially for us here in the Northwest, we've got such a great real estate market. I mean, if you're looking to invest your money and help your money grow, I mean, real estate is definitely, a safe bet if you plan to sit on it and hold on to it. So,
I couldn't
well,
agree more.
Keelan, how do people get in touch with you if they want to purchase a home and work with the best lender I've ever worked with, or if they want to refinance? How do they get a hold of you?
Oh, thank you very much. I'm just going to throw it out there. You can call me on my cell, 206-321-4941. Google me, look me up, or my email address is kharvey@highlands with an S mortgage.com. I'm happy to help educate anybody and ensure that we manage the most important asset that you'll ever have for the rest of your life as best as possible.
Definitely. And you do such a great job for your clients. I know because I've worked with you so many transactions we've had together, and then you helped me buy my home earlier this year. So if anybody needs a good reference for Keelan, they are welcome to call me as well. So, and if you are looking to purchase or you're looking to sell your home, or you need some information about the market that we're in right now in terms of comps, you can certainly reach out to me as well. My name's Kari Ray Davis with Keller Williams, and you can reach me at 206-330-6985. So, well, Keelan, thank you so much for taking the time to chat today. I know that we haven't done this in a while, and I just felt it was a good time to have this conversation again, because I feel like there's a lot of people that are kind of vacillating and teetering on the decision of whether they're going to buy right now or not. So hopefully this helps them out a little bit.
Yeah, thank you so much for having me. I agree. I'd love to do this more. And you're not giving yourself enough credit. They don't come any better than Kari Ray as far as agents. So if you're looking for a good agent, and she probably gets more seller credits when we did get seller credits than any other agent I've ever worked with. So I would highly recommend you reach out to her as well.
Thank you. Oh, I love that. You're making me blush a little bit. So awesome, Keelan. Thank you again so much. And I look forward to chatting with you about these topics again sometime soon.
Me too. Bye,
Okay.
everybody.
Thanks. Bye-bye.